What's up, everybody? It's Anthony dropping a video on finding some value in the stock market by looking at comparable products. Um, I'll start with a company that I've held shares of off and on, currently not holding any, just because I'm being a little more aggressive looking at things that are maybe a little more undervalued. But this company is called SRRA Oncology, or SRRA as the ticker. And you can see Morningstar thinks it's undervalued by 27%. Fair price per share about $22, trading at $16 per share. And SRRA has a drug called momelotinib. So if we pull up Yahoo Finance and take a look at SRRA, and we look at our news, so they're talking about momelotinib and some of the recent research that's come out. Basically, this drug's in development. It's a JAK inhibitor, and mostly they seem to be studying this in second line setting for myelofibrosis predominantly. And we can see that this company, it's not worth a whole lot, 177 million for a pharma company. That's pretty small. But this company's got a great shot, I think, to get FDA approval down the road as a second line option in myelofibrosis. There's a big myelofibrosis expert named Ruben Mesa who's been involved in the research. And this drug has some unique strengths to it. It seems that they have some excellent data regarding highly transfusion dependent patients, and that their patients in studies have had vastly lower transfusions on this drug, even compared to some of the other historical alternatives. So we can see this company is worth 177 million. So let's pull out a comparable company, which is INCY. So INCY, most of the value of this company is in Jakafi, which is really the champion drug of the myelofibrosis and polycythemia vera market. And you could see that this is worth almost $20 billion. So that assigns a value of about $20 billion to this drug, Jakafi, which is the current first-line approved drug in myelofibrosis. So, if we think that SRRA Oncology has a comparable product or a chance to get a piece of this market, it doesn't take much math to realize that, or it doesn't take a great understanding of math to realize that 177 million is an incredibly smaller number than 20 billion. And although SRRA, they probably are never going to have even close to a majority market share in the JAK inhibitor industry, they'll have their own niche if they get approval. We're talking about second line and or third line treatment. So, assuredly, you'd like to think that that's going to be worth more than $1 billion within a couple years, or maybe even much more than $1 billion. Well, if the current company is only valued at 177 million, you start to see, if you assign a very conservative value to this company in relation to another, if this company is able to do 1/20th of what INCY has been able to do with Jakafi, then you've got a five-fold increase in the value of your investment. So 170, let's call this 200 million. If they get to $1 billion, that's a five-fold increase in your investment. And I don't think that's that aggressive of a goal for a drug that clearly has some exciting literature on its side, some exciting experts on its side. This is a company that I think has a chance to grow quite a bit. Will it ever become a $20 billion company or more like INCY? Probably not. INCY, there's a lot of advantage to being first to market and first line, but again, this is just hopefully to help people conceptualize value in a company by looking at a comparable company.